mistakes or even facing penalties simply because you didn't have the right guidance. Um, that's why we're here today. Thrive is all about empowering our community, and this session is just one of the many ways we want to ensure that you have the knowledge and support you need to succeed. It's good enough that we all left our countries just to come here, but it's also important that we enjoy all the benefits, inherent in Canada. To help us break it all down today, we have an incredible expert with us today. His name is Jerry. You can call him the Tax Whiz. He's a seasoned tax professional with over a decade of experience as some of the world's top consulting firm, including the big, three of the big four. He has helped countless individuals and businesses navigate complex tax situations. And today he's here to help us do the same. The day I heard Jerry speaking, I just knew I had to bring him to the Thrive community. He's so intelligent, so seasoned. And I was just walking by where my husband was listening, to a conversation and Jerry was speaking. I said, I'm not the only one that will benefit from him. We are supposed to pay him a lot of money. We cannot afford him. And we pleaded for him to come. Jerry, you have the floor.
Thank you so much, Amade. I'm flattered. Yes, I'm just going to be doing my bits to break down some of the um, complex issues that, has to do with taxes in Canada. And hopefully at the end of the day, I would have enlightened some of us at least. I know some people probably even know more than me, yeah. So I'm just going to help the few people who do not know as much as I do or do not know at all about what taxes mean. Um, how many minutes do I have to speak, Yamade?
You could speak for 30, then we do the questions afterwards.
Okay. All right. So I'm going to try and speak as if I'm speaking to people who have not heard what taxes before. Um, Probably all of us are from Nigeria, and Nigeria is a country that, things are not done, in a structured way. A lot of people have never paid taxes. Some people think they have paid taxes, but they have actually not paid taxes. I always tell people that if you have ever earned a round figure as your salaries in Nigeria, then you never pay taxes because the tax calculation, there is no way your calculation results in your after-tax pay being, let's say, 150,000 or 200,000. If you have been paid that amount of money, it means the right amount of taxes were either not deducted from your pay or an amount was just deducted and you were told that that's tax. So basically, because of that, a lot of people have struggled to, you know, conform with the tax laws in Canada. So many people hate the fact that we pay taxes. A lot of people think the taxes are too much. And while that may be correct, that is not the point of the conversation. The conversation is you're in the country where you cannot escape taxes. You can try to escape, but eventually you are going to get caught by the law. So I'll start with what does it mean to file your taxes? Filing your taxes basically just means you submit your documents to the CRA every year. That's what it means. Now, you can file your taxes and not have anything to pay. So what it means is you worked in the year, your employer has deducted all the taxes from your account, from your pay. So at the end of the day, when you submit your information to the CRA, there's nothing left to pay. Now you have that possibility. You can also be in a situation where you're not earning income at all. So there's nothing to report. So a lot of people mistake filing taxes to mean, oh, it means I must pay taxes. Some people also mistake filing taxes to mean I must get a refund. These are completely different concepts. So filing your taxes is different from paying your taxes. Now, do you have to file your taxes every year? The answer is no. Some of us might have heard that, oh, you have to file your taxes every year. The answer to that question is actually no. Why I was saying no is because the CRA actually does not require you to file your taxes if you did not earn an income in a year at all. So if you just came to Canada, for example, and maybe you came towards the end of the year, you couldn't get a job, or some people actually don't have jobs throughout the year. and so they didn't earn any income, then you do not have to file your taxes that year. But is it advisable for you not to file your taxes? The answer is also no. While it is not advisable why it is not advisable for you not to file your taxes is because if you don't file your taxes, then you are not going to be in a position where you can get benefits from the CRA. So the way it works is every single tax resident of Canada, one way or the other, is entitled to certain deductions, credits that the CRA can give you. I'm sure a lot of us have gotten GST credits, Canada carbon tax rebates. If you are in Ontario, you probably get OTB. It's called the Ontario Trillium rebates. These are all different types of credits and benefits that we get from the government every year. But how does this work? The only way you can get these benefits is if you actually submit your information to the government, which means you file your taxes. So even though the CRA owes you these benefits, they would not pay you until you do the right thing. So they're expecting you to submit your information to them so they can use your information to calculate how much benefits and credits are due to you. And then you cannot get paid. So look at the situation where you came to the country, you feel like I didn't earn any income, so I don't have to file my taxes, and then you relax. Yes, you've done the right thing by not filing your taxes because you're not required to do that. But you've also lost out on several benefits and credits that the CRA could have given you, and you would never get it if you don't file your taxes. So, what other situations are you expected to file your taxes if you owe the CRA money? There are people who believe that because of the way things were in Nigeria, where you can get paid or you do a business on the side and then you can get away with it. In Canada, the system is so structured in such a way that if you have ever earned an income anywhere, you might not realize it, but the CRA has your information. They have a pretty good understanding of how much money you've made. They're just waiting for you to do the right thing by filing your taxes. How do they know? If you work for an employer, your employer deduct taxes from your pay and submit to the CRA. Yesterday was actually the last day for every employer to submit their T4s to the CRA. So, I mean, the same way you file taxes to the government, your employer also submits your information to the government. If you bought shares, stocks, maybe you bought shares from Wealthsimple, Questrade, all types of, ETFs, whatever. For every dividend that you get, those companies also send information to the CRA. You did GICs. GICs are called guaranteed income certificates. That's the equivalent to fixed deposits we have in Nigeria. If you did a GIC, your bank has sent your information to the CRA. So if at the end of the year, when it's time for you to file your taxes, you don't submit this information to the CRA, then and you feel like, oh, you're smart. If I don't file my tax, or maybe I have 3 T4s, let me just report 2. The CRA is going to catch you because they have the third T4 already. They just want you to do the right thing. So you submit your information, you get a refund of 5,000. You're happy, you've even spent the money. Now the CRA will redo your taxes for you and send you a love letter. And now this love letter, you are owing way more taxes. Okay, imagine a situation where you thought you had a refund of 5,000. You've spent it. You've gone to Mexico. You've gone to Bahamas. You've enjoyed your life. Several months down the line, you now get a letter from the CRA saying, we actually recalculated your taxes. And instead of a refund, you're actually owing 5,000. Now you've spent 5,000 of money that you don't have, and you have to pay 5,000 back to the government. On top of that, for every money you owe the government, an interest is calculated on it for every day that you've not paid it. So imagine instead of 5,000, the CRA calculates 5,000 times the interest rate as at that date multiplied by the number of days that you've not paid. So you're probably paying about, let's say 6,250. So that's a lot of money. As I speak to you, I have clients that are owing the government $30,000, $60,000. Like they don't even know how to pay back. And you cannot run away from it. The CRA is going to tell you, oh, we can structure a payment for you. You pay in installments, but it's not something you can run away from. Once you owe the government, you must pay. It doesn't matter how long. So basically, if you owe the government money, they know about it and they can come for your taxes. So, are there benefits to filing taxes? Oh, before I go to that point, children can also file taxes. If you have a child, don't assume that your child has to get to the point of age of 18 before they file taxes. Some people believe this because they believe, oh, if I have a child, I can continue to get Canada child benefits up until the child is 18. So because of that, the child should not pay taxes up until they are 18. If your child is a day old or a month old and your child earns an income, whichever way you've done it, maybe you bought shares in the child's name or you have a company, you pay your child's salaries for whatever reason, you need to file taxes for that child. Now, let me go to benefits of filing taxes. Like I said earlier, when you file your taxes, you get benefits and credits that are due to you. Your GST credit will never be paid to you if you don't file your taxes. Your Canada carbon rebates will never be paid to you if you don't file your taxes. Your child benefits will never be paid to you if you don't file taxes, and several other rebates and credits. So that is like the number one benefit for you to file your taxes. The number two benefit is your refund. If you don't file your taxes, you will not be able to get whatever refund is due to you. And you may never know how much refund you have until you actually submit your information to the government. So imagine you're supposed to file your taxes and get a refund, but then you don't file because you just want to know. Maybe you don't care, or you've heard about it and you believe, nah, I don't care, or you don't even know about it. I mean, that's ignorance. But at the end of the day, it's not an excuse. So imagine you were supposed to get a refund of $2,000 last year, 2023, you were supposed to get another refund, but you've never filed your taxes. All of these monies have just been sitting with the government when they could have been yours. So basically, it is very important for you to file taxes so you can get all this refund and benefit from the government. And then other reasons are if you have anything to do with Canada, for you want to get a loan for your business, they'll ask you for your tax document. You want to get a mortgage, they'll ask you for your tax document. Sometimes, even if you want to get a car, you want to get credits, loans to get a car, they'll ask you for your tax document. If you don't have all this information, you cannot access funds from Canada. So it is very important that you do all of these things. Now, is it difficult to file taxes? I know people who they get scared when they hear taxes. Anything that has to do with money, it just scares them. But the beautiful thing about it is filing your taxes is easy. You don't even need to get a tax professional to file your taxes for you. I mean, I file taxes for people for a fee, but if you do not want to use me, you can do it yourself. You can, if you go to Walmart today, for example, or most of all these stores, you will see TurboTax, CDs and all of that that you can buy and install in your house and, file taxes yourself. Or let's even say you don't buy those ones because they come at a cost. You can go online right now, type, World Simple Tax, type TurboTax, type Simply Tax. There are different softwares out there that you can create an account, log in, and start to file your taxes for free. So it is actually very, very possible for you to like do these things on your own. You can also call the CRA. If you have a very simple return, the CRA has a group of people that volunteer to do these things at no cost. They get your information and they'll file your taxes for you. The only but to these things are these platforms are free. So there is no guarantee that your taxes will be done right. Now, what do I mean by right? They're not going to make mistakes on your return because at the end of the day, they're asking you questions that you are answering and they're computing your taxes based on the questions, based on the answer you've provided. So if you make a mistake in your input, they're going to make a mistake in the output and you file your taxes and it is wrong. So, which is why I always say, even though it is easy to file your taxes because you can do it yourself and not pay any money, there are mistakes that you cannot avoid. Apart from that, you might be in a situation where you actually don't know what to provide the software. For example, there are at least 400 credits and benefits that you can take advantage of when you're filing your taxes, but you don't know these credits. And if you decide to create a free account with all of these platforms, they are not going to deduct these things for you because it's a free platform. And they also expect you to know it. So they just ask you basic questions. And when you answer the basic answers, you upload your T4, you submit your information, that's it. On top of that, if you want to claim some deductions, for example, if you use TurboTax today and you want to claim medical expenses or donations, they'll ask you to upgrade and pay a fee. That's because you are now beginning to complicate matters for them and they need to get paid. If it was just a simple return of you just have T4 to report, that's fine. But as soon as you have deductions to claim, they tell you to upgrade, you pay a certain amount of money. So you can now see why, even though it is easy for you to do it yourself, at the end of the day, when your return is getting complicated or you want to take full advantage of your returns, it is always advisable for you to pay someone. Now, one of the other reasons why paying someone is better is because when you do it yourself online, the system is called netfile. When you do it with someone, the system is called e-file. So someone who is using e-file is actually preparing your return on each of those forms that you cannot see. It's not online, it's not free. There's a license that professionals pay to actually get access to some of these complicated pages that you don't see and prepare a return. So there's more detail that goes into your return when someone who's experienced, who knows what they're doing, is filing your taxes for you. So these are just the difference. But at the end of the day, the message here is you don't have to pay to do your return. You can do it yourself online for free. I'm just trying to tell you the difference when it comes to doing it for free and paying someone to get it done for you, or going online using the free method. When it's time for you to claim some expenses, you upgrade and they do it for you. Um, Now I'm going to go to what are the things for you to look out in your return. A lot of people, because they are not interested in taxes, when they file their taxes, they don't even look at the documents that the system tells them download a copy of your return. They just, oh, I filed my taxes, thank you, and they go to next year. Now the mistake in this is if there's an error in your return, you can actually correct your return after you're filed. You just have to wait for the CRA to issue what is called a notice of assessment. When the CRA issues a notice of assessment, that's when your refund will be paid to you, or they'll tell you how much you have to pay. At this point, if there was a mistake in your return, you can go back and make an adjustment and correct that return. If you don't correct your return immediately, then it's gone for that year and you are living with a mistake that has happened that you don't even know about. So I'm just going to be explaining some of the things you have to look out for in your return. Now, your return is called a T1. That's a personal income tax return. If it's a corporate income tax return, it's called a T2. But for personal income tax, it's called a T1. Now, a T1 is 8 pages. The first and second page is your personal information. Your name, your address, your SIN. Are you a resident of Canada? Are you a citizen of Canada? Are you married? Do you have some form of disability? These are the information that you will find on pages 1 and 2. Some of you might be asking yourself, is it really important? I mean, my name is my name. Even if there's a mistake on my name, can it change anything? The answer is yes. If there's a mistake on your age, for example, there's something called an age amount. If you are, for example, if you are 64 years old and no, if you are 65 years old and you mistakenly impute your age as 64 years old, you lose out on the benefit. There's a credit that is applied to seniors in Canada that, once you are at a certain age, you can claim a particular benefit. So imagine if someone who is 65 years old wrongly files their tax returns as they are 64 years old, then they lose out on a good amount of refund and they might not even know about it. If you came into Canada at any point in time in the year, you're an immigrant. You're not a full resident. That's what the law says. So let's say you came to Canada July 15, 2024. You got a job immediately. So you have like good income between July and December. Then you file your tax at the end of the year. If you file your tax at the end of the year and you don't impute the exact date you came into the country, the system is going to assume that you've been in Canada from January to December. So all the credits that are due to you are going to be paid in full. but that's not supposed to be done. The system is supposed to prorate. So it's supposed to divide. You came in, let's say you came in July 15, and July 15 to December 31st, I'm just assuming, is exactly half of the year. And that's, let's say, instead of 365 days, it's 180 days. Whatever credit is due to you is supposed to be divided 180 over 365 times 10,000 over 1. So you will get half of that credit and not the full amount. But because you didn't state that you came into the country in the middle of the year, the software has assumed that you were a resident of Canada from January 1st to 31st December. Now you filed your return, you've gotten your refund, and you're happy. The CRA now recomputes your refund and lets you know that, oh, you're actually supposed to get $2,500 and not $5,000. Meanwhile, you've spent the entire $5,000. You owe the CRA $2,500 and now you have to pay back just because pages 1 and 2 of your return was not done correctly. And instead of stating that you were an immigrant, you have stated that you're a full resident. That's a mistake. So going through your return, each and every single page, as soon as they are done, is very, very important because then you can correct every mistake that has been done, that may have been done that you don't know about it. Pages 2 and 3 reports your income, your total income for the year, if there were any expenses, and then your taxable income. Pages 5 and 6 report your deductions for the year. Oh, I'm claiming medical expenses. I'm claiming donation expenses. I'm claiming so and so expenses, work from home expenses. Pages 7 and 8 will now show you your tax calculation and how much you owe the government or how much the government owes you, or nobody's owing anybody. It's just zero. So it is very important for you to actually go through your return and know exactly what is in it, even though your return has been filed. Now, I have a few minutes left, so I'm just going to try and brush up on a few other things. I'm going to talk about corporate tax, and then I'll go back to some expenses. Okay, I think I should start with some expenses people claim for personal income tax. Okay, no, let me start from corporate tax. A lot of people come into Canada and they hear, I'm speaking this one, like I'm talking about this one specifically because we're all Nigerians. And they hear from their friends that if you're sharp, the best thing for you to do is open a company account so that you can be expensing a lot of things and you can get a big refund. So I know so many people that as soon as they come into Canada, they incorporate a company just because they want to be expensing things. People buy cars and throw it under their company. People go to restaurants, people travel, and they just file the expenses under the company and they say, yes, you know, they are using sense for the government. Now, what you don't understand is if you incorporate a business, you have already complicated a lot of things for yourself. Unless you actually incorporated a business because you actually have a company to run. I mean, if you have a business to run, of course, you need to incorporate because that's what makes sense. But if you just incorporate a business because you want to take advantage of the system and claim so many expenses because your friends have told you that that's what they've been doing, and every year they get 10,000, you know, they can't wait for tax refund season because that's when they make money from the government. You're putting yourself in big soup, like really big soup. You have no idea what you're doing because you can never get away with it in Canada. That one is for sure. No matter how long you've been doing it for, you can never get away with it. And why I'm saying so is the government puts a more eye on corporate accounts than even personal income tax accounts because they know what people are doing with it. It's called tax evasion, and tax evasion can land you in jail. So if you incorporate a business has its own life. The same way you exist, your company exists. So for every amount of money that you make in that business, you are going to pay, if you make a profit, you're going to pay tax on it as corporate profit, corporate tax. For every amount you send to yourself, you incorporate the company, you use it to collect jobs, they pay you, they don't deduct tax. Then at the end of the year, you believe you can do and do for every money you pay yourself, That amount of money is called a dividend. And a dividend is taxed at, guess what? 38%. Now, your personal income tax, you might depending on your province and stuff, you might pay 15% tax on this, 20 something percent tax. A corporate income tax, any money you send to yourself is taxed at 38% because it's a dividend, and dividends are taxed specially. If the other way you can do it is to not pay yourself as a dividend, you assume that every money that you take from that business is a loan. A loan has to be paid back with interest. It does not matter if you are the only shareholder of that company. That company exists on its own. If for some reason you die today, that business continues to exist until someone closes it. So you can see why it is a big deal. So no matter how much money you have in your company, if you don't do things the right way, you would be paying a lot of money for it. So unless you have an actual reason to open a business, do not open that business. Open a business only if you have something to report in that company. The same way for expenses. If you are claiming expenses in your business, it has to be an expense that was related to the business. You traveled on vacation to the United States. It's personal vacation. It has nothing to do with your company. You cannot file it as traveling expenses under your company because if the CRA comes to audit you, and they can, they will ask you, oh, you set up a business for fashion designing or hairdressing, and throughout the year you reported only 5,000 in income, but you spent 15,000 vacation going to Japan. How does a business that makes only 5,000 generate enough income for you to travel to Japan, for vacation for a whole 10 days, for example? So it doesn't make sense. If it does not make sense, the CRA is not going to allow you to claim that expense. So I hope you can see where I'm going with this. Now, let me come back to personal expenses. A lot of us will have heard, I think I have about 2 minutes left. A lot of us will have heard about work from home expenses. Oh, they tell you if you work from home, you can claim so many expenses, that's opportunity. You claim some people are claiming rent, their mortgage payments, mortgage interest. Some people buy a refrigerator, they claim it. Some people buy iPad, they put it as work from home expense. No, you claim your electricity, your heat. So there are rules and regulations that guide what you can claim. You don't just claim expense because someone has told you, or you open your form and you see on the form they say rent, and you don't. There's a calculation that you are allowed that determines what you can claim. So for example, you live in a rented apartment and you only have one room in the house. One is your bedroom, the other one is your sitting room. A corner of your sitting room is your office. That's where you have your table, chair, laptop, and everything. And that's where you work. Now it's time for you to file your returns, and you are claiming 100% of your rent, 100% of your electricity, 100% of everything that you've spent in the house. There's a calculation. The calculation says you find the square foot of where your office is, that small space where you're working. You divide it by the total square foot of your entire apartment. Then you multiply it by how many hours you actually spend working in that part of the office. Then you now multiply it by, for your electricity, whatever percentage you've gotten from that calculation, you multiply it by your electricity bill. So if your electricity bill was $500 in the whole year, by the time you apply the percentage, the amount that you can actually claim is probably $25. So that $25 is what you can claim as work from home expense for your electricity. And it makes sense. Did you use your entire house as an office? No. So why are you trying to claim the entire rent in your house as if it was rent for your office? Now, on top of that, the only way you are allowed to claim work from home expenses is if your employer gives you a form called Form T2200, and that form must be signed. So if that form is signed, on that form, there are boxes that the employer will say, okay, we approved your Made to work from home from January to December. We are also allowing her to claim this expense, that expense, that expense. If you claim any expense that is not ticked in that box that your employer has ticked, if the CRA comes for you and say, okay, let's see the form that your employer gave you, permitting you to claim certain expenses, and you provide it to them, and they see that electricity or something was not ticked in it, but you have claimed it, then you're in trouble. The CRA is going to recalculate your expense and remove that amount that you have claimed. And of course, if you were in a refund position, you will lose some refund. If you were in a position where you were not owing anything, now you might be owing something. Or if you were owing, let's say 5,000, now you're owing 10,000. So your taxes are just look at it like you you were charged to court and you just believe you can represent yourself in court. Everybody knows when it comes to law, for example, it's a big deal. You don't want to go to court and answer to the judge yourself. You want a lawyer to represent you because you don't know the right things to say. There's some things you will say that will put you in more trouble, even though you're not supposed to be in any trouble at all. Your taxes are in that category. If you make making a mistake is not like it's punishable, like it's not as if you go to jail or something. It's just something that can affect you financially. And everybody knows money is a big deal. So if you make a mistake in your return because you don't know, it can be costly, but then that's not your fault. But where it becomes very expensive is if you are trying to game the system. You're trying to, use Nigerian sense and say, the way FRS and LRS was, you can run a business and never, pay tax. You cannot do that in Canada. So it's very, very important for you to take advantage, for you to like understand the nuances of these things, which is why, depending on your situation, it is always advisable for you to have a tax professional on one hand. If you have any questions, you have any issues, report, oh, I want to start a business. I don't know how to structure it. And at the end of the day, I feel like I've just scared people. So let me just tone it down a little bit. What I'm trying to do today, what I'm trying to do today is not to put fear in you. It's actually to make you understand that if you plan your finances well, you can end up in a situation where you don't owe the government anything. You've done the right thing and you have nothing to pay. You even get a refund. Now, think about it this way. Canada has made it beautiful in such a way that there are programs that you can take advantage of that will ensure that you are getting good refund at the end of the year. I mean, if you've been in Canada for a while, you must have heard of something called TFSA. It's called a tax-free savings account. You might have heard of RRSP. RRSP is called a registered retirement savings account and plan. You must have heard of FHSA. FHSA is called First Home Savings Account. Now, anytime you hear these accounts, just know that they are called registered accounts. A registered account is like a brokerage account. Now, a brokerage account is an account that allows you to invest in stocks and shares. That's what it is. So it's different from your savings account. If you have a RBC or CIBC checking account, you can't buy shares in that account. That account is just to collect money and spend, issue checks, basically. That's what the word checking came from. But in Canada, we don't use checks. In Nigeria, the equivalent of a checking account is your current account. Now you have a savings account where you can just save money. You're not expected to spend from it, but you can transfer out of it. That's a savings account. But now there's something called a registered account. These accounts I just explained to you are called non-registered accounts. Registered accounts just mean they are registered with the CRA. So it's a special kind of account that can allow you to take advantage of certain benefits that have been embedded in those accounts. I'll break it down for you. A TFSA means anything you do in that account will not be taxed. So you put 7,000, which is the yearly limit for 2025. You put 7,000 into your TFSA account and you buy shares, and that 7,000 has grown to 50,000. You've made a lot of gain in that account. The beauty of that account is you will never pay tax on that account. And you can withdraw from that account at any time you like. If you were to buy shares in a non-registered account, and from 7,000, you've made 50,000, that profit of 43,000, you will pay tax on it. But in a TFSA, you're not paying tax on it. That is why it is called a registered account. It has a benefit. An RRSP account is a retirement account. The government is looking at it like, oh, for every body that works, we deduct pension from you already. It's called the CPP. But we understand that the CPP might not be enough. A lot of people like to live large. I want to retire and, traveling here and there, living large and stuff. So because we understand that the CPP that we're deducting from your pay to save for you might not be enough, we are permitting you to open an RRSP account and put money in it. Now, on top of that, that money you are putting in your RRSP, you can also invest it in shares. And whatever profit you make, you're not paying tax as well. But you cannot withdraw from that account until you retire. The moment you decide to withdraw from that account, they will tax it. Now, another benefit to the RRSP is an RRSP helps you reduce the amount of tax you pay and increase the amount of refund you can get. Let me break it down for you. You earn 100,000 and your employer has already deducted all the tax that you're supposed to pay because you just get T4. So if that was the only thing you did and you file your taxes at the end of the year, you don't owe the CRA. The CRA does not owe you. Everybody is happy because they've deducted your tax from the account. But if you saved some money in your RRSP, let's say you saved 10,000. That 10,000 that you have saved, the government is saying, we're going to give it to you. We're going to allow you use that money to reduce what you've earned. So instead of 100,000, now your taxable income is 90,000. So what the government is going to do is they are now going to tax you on 90,000. And let's assume the tax on 90,000 is 9,000. But remember that what you actually earned was 100,000. And your employer has, let's say, deducted 10%. 10% of 100,000 is 10,000. So your employer has deducted 10%, 10,000 from your account and paid to the government, meaning you've paid 10,000 as tax. But because you've saved 10,000 in your RRSP, the government is now saying no. Because of that, we are not going to use that 10,000 to reduce your 100,000. Now we'll calculate your tax as if what you actually earned is 9,000, is 90,000. 10% on 90,000 is 9,000 tax, meaning your employer has deducted more money more tax from your money than what you should pay. So now 10,000 minus 9,000 is 1,000. Now you have a refund of 1,000. So that refund of 1,000 is the benefit that the CRA has given you back because you saved money in your RRSP. So you can see that RRSP has given you one, whatever you have invested in that money, in that account, you're not going to pay tax on it. Now, on top of that, you're getting a refund of 1,000. The same thing applies to your first home savings account. Your first home savings account, you can contribute 8,000 per year for 5 years, total of 40,000. You can also invest that money and don't pay tax on it. Now, when you want to withdraw that money, if you're withdrawing that money to build a house, no tax, because that's the purpose of the account. But if at some point you're just tired and you need money, maybe you lost your job, for whatever reason, you just feel like I need money from the FHSA, you can withdraw it, but now they're going to tax it because you are no longer withdrawing from that account for the purpose that it was designed for. You are withdrawing from that account to spend. So now we're going to tax it. So tax in Canada is not just from a point of you must pay tax, so we'll catch you and you owe, now you're going to pay so much money you can go to jail. No, there's a beautiful angle to it. If you understand it and you do it right, it's called tax planning. I always tell people tax planning does not start when it is time for you to pay tax. It starts in January of, it starts at, January of every year. You've lived in 2024, you've made some decisions, and now 2024 is gone. So in 2025, the right time for you to start planning ahead of tax season for 2025 that will happen in 2026 is in January. Because now you know that if I make some savings into my FHSA or my RRSP, I get enough of refund for next year. So you don't start to plan for taxes in February when you start seeing adverts and hey, it's time to pay tax. At that point, it is already too late because whatever has happened in 2024 has happened. You cannot go back to 2024 and change it. So whatever decisions you made, either you made mistakes or you didn't take advantage of some benefits, you cannot go back and correct it. But for 2026, if you start now, you start making the right decisions. Oh, I spent some money on medical expenses. You keep the receipt. I donated money somewhere. You keep the receipt. I whatever you do. I have a business. It's just hairdressing though. You keep the receipt so that when it is time for you to file your taxes, you're just shipping all of these documents to your tax person. Like, oh, I have several. I know people who claim as much as 20,000 in tax refund and they've not done anything wrong. It is the actual amount of money that are due to them. So imagine making decisions and at the end of the year, you have like 20,000 refund. That can actually change your life in many ways. Don't let me even say 20,000. 20,000 means you earn a lot of money, right? Okay. 3,000, 5,000. If you get that amount of money as a refund, you've made very good decisions in the year before. So now you're reaping the benefits of that when it's time to pay taxes. So I can keep speaking for 1 hour actually. So I'm really just going to stop here and, entertain questions and what else anybody has to say.
You're right, Jerry. This is such an awesome, presentation that you've done for us today without you even presenting anything. I have a friend that works with CRA that just messaged me and said, Yomade, where did you get this person? This person is too knowledgeable, is too intelligent. You broke it down to us just like you said, like we're babies, like we never knew anything about tax. For people that joined late, I can tell you that you missed a lot, but you still have a chance. Jerry's still here to entertain questions. So I would just like to see if anyone has a question. Please raise up your hand so that we do not we do it the right way, basically. So does anyone have a question? I saw some people drop questions in the chat. Okay, Ade, you can go. You can unmute and go.
Okay, thank you so much, Jerry. Thank you so much for the presentation. I really learned a lot. I just have a quick question. So for those, I've been seeing ads that the deadline for RS contribution is on the 3rd. Is there a difference for those who contributed in the previous year and those who contributed from January up to the deadline? Thank you.
No, there's no difference. So for RSP contributions, the timing is weird. You can contribute in the whole of 2024 and in the first 60 days of the next year. So whatever contribution you make in the first 60 days of the next year also counts as if you made it in the year before, and you can use it to file your taxes for that same year. So any contribution you made from 1st January 2024 to 31st December 2024 and up to actually the date is supposed to be 28th of February 2025. But because most times it's extended because it's a weekend and stuff, so it's extended into like the next few days in March. So any contributions you make for those period, you can use it to claim deductions in your tax for that same year. So yeah, there's no difference.
Okay, Udo Chuku, let's have your question. You can unmute yourself. I don't know if you're speaking.
Yeah, my question is on I already dropped it. So I was asking about the contribution room for FHSA. So for someone who came into calendar 2024 and then opened FHSA accounts 31st December 2024, would they be eligible for the contribution room in 2024?
Absolutely. The answer is yes. Even if you opened it 1 minute in 20 before it was Happy New Year, you qualify for that. As long as your FHSA account date reads 2024, you get the 8,000 for that year. So which means this is 2025, you have 16,000 room to contribute. And you can claim the entire 16,000 in your return for next year.
Okay. All right. So I wanted to go to the chat. Esther will come to you. Lillian asked, please talk about filing for rent that is being paid through Interact. If you're paying your rent through Interact, how do you file your tax for this?
Okay, so there's nothing like filing for rent. So rent expenses are just like you have medical expenses.
Mm-hmm.
You can use it to reduce how much tax you are supposed to pay in the year. But there's a lot of rules that guide that. So, for example, if you work from home, like I mentioned earlier, and you have that approval form, you can claim a portion of your rent. If you have a business expense, you run a business in your house. So technically your house is your office.
I am in a meeting. I will
The
call.
portion, the part of your house that you use as office is you can claim rent for that portion. There's a calculation for it. Now, the other angle where you can claim rent as an expense is if you live in BC, which I think most of you do. So this is actually a very good way to talk about it. If you live in BC, Manitoba, the government of BC and Manitoba allow people to claim what you call renters tax credit. For BC, you must be at least 19 years of age. You must have lived in BC as at 31st December 2024. Meaning if you lived BC a day before that day, you cannot claim that credit. Then you must have paid rent for at least 6 months in the year. If you meet all of these requirements and you earn not less than 83,000 in the year, 80,000 actually. If you earn not more, meaning if you earn more, you don't qualify for these credits. If your salary is at least 80,000, then you qualify for this credit. And the credit is at least $400. So when you're filing your return, this is one of the reasons why I say if you meet this category, for example, and you file this return online for free, you cannot claim this credit because all of these platforms, I don't know of any one of them that can allow you claim this credit. The only way you can, even if you meet some tax people, they don't know about this credit, to be honest. So your tax professional has to know what he's saying or what he's doing for him to know that you can claim this credit because automatically it's not going to pop up. So someone who lives in BC can claim this credit. Someone who lives in Manitoba zone is even beautiful. You do not have to, there's no income threshold. Anybody can claim the credit. And the credit is as high as $525. And there is also no limit to the amount of months you must have lived. You could have lived for 1 month. What it means is you claim $43.75. That's 525 divided by 12. So you claim that amount of money for every month that you lived in that city. So rent on its own is not something that when it's time to file tax, you just send your rent receipt to your tax person and say, claim it from me. No, you cannot just claim rent expense. It is an allowable expense that has a condition, and you must meet that condition for you to claim it. So to answer your question, you can claim it, but you need to have a reason to claim it. Not everyone can claim rent expense.
Okay, so Jeff, I wanted to clarify something. So I think the reason why people so I know this person stays in BC, she's my friend, and one of the reasons why is that on our community group there were conversations that that when you're filing your tax, it's not like you take your tax, it's not like you take receipts or you upload it anywhere, but you need it for future in case there's an audit, which you are not even sure there will be an audit. So I think what they want to know is that how do they is it that they will keep the receipts on this Interact to show that the narration is rent? Then for instance, people that are subletting spaces, should the person they sublet from, should the person create a receipt for them? There should be an agreement to say that you are living in one room in my house, and even if you are living in one room in my house, this is the receipt. So those are some of the things some people want to know. Then just to add a third question that is related to that, for instance, let's say somebody is earning 150,000 in a year, and the person now the person started working in, let's say hypothetically, in July. That's like 6 months. Will they still see the person as earning 75,000 in a year, and will the person still benefit from this?
Okay, so first of all, if you are giving your returns to someone to prepare for you, they will ask you for your receipts. That's because the CRA is going to question us. For example, if I prepare a return for you and I claim a certain amount of money as expense, several weeks after the tax season, the CRA is going to send me an email. They do it every year. They will randomly select some of your clients and say, you have done so and so for these people. Now let us see evidence that they are actually supposed to claim this expense. As a tax professional, licensed, registered with the CRA, because we're actually registered with the CRA. Every year, the CRA does checks on us to ensure that we can do what we say we can do. So if I cannot provide this document, I'm in trouble.
Absolutely.
I can lose my license because someone came to me and said they paid 100,000 in rent. I just believed them. I just claimed it for them. Now they've claimed 25,000 in refund and they've gone to live their life. I'm in trouble. So if you want to do your returns with me, I'm going to check those documents just for my own verification and for my own safekeeping. But you're right. Typically, you're not supposed to provide these documents to the government. They will tell you to keep it because they can ask. Now, to answer your second question, someone who pays rent as Interact, yes. If you want to claim rent as an expense, go back to your Interact history. You can munch that page. It doesn't have to be an official receipt in this case because there's really nothing you can do. That's how you paid. Not everybody has, an official apartment where they have somebody managing the building and there's a receipt. Some people pay to Nigerians, live in basements, and they just interact their rent. So munch that screen that shows each and every of those interacts you have paid and just keep it. The CRA can take that they can also take bank statements. You highlight it, your credit card statement, they can take it. Now, thirdly, you mentioned people that sublet their houses as rent. Now, this is very important. If you sublet your house as rent to somebody, you are a landlord, which means you earn rental income. And you need to submit, there's some rental income is calculated on form T776 of your T1. You need to calculate rental income and pay rental tax. There are a lot of Nigerians that believe the government will never catch them. You have a detached house. Your basement is rented to another Nigerian. Nobody knows that it's a rental apartment. So they're just collecting free money every year and you're living your life. Now, let me tell you how the government can catch you. You are a landlord. You've rented your basement to a Nigerian. The Nigerian pays you as Interact. And you spent the money. You've never reported tax on it since you came to Canada. Now, you've taken a tenant that now claims work from home expense. And that rent that they pay you, they are claiming it as work from home expense because they are working from home. And the employer has given them that form to claim it expense. So now they filed their return and the address on their return says 111 BC, Vancouver Avenue, BC. That's the address, which means that's where they live. Now they've also claimed rental expense and they've submitted to the CRA. So now the CRA knows that in that 111 Vancouver Avenue, BC, they are paying rent to someone that lives in the house. Now you, as the landlord of that house, you've never told the CRA, you've never declared your rental income. You've also filed your return. 111 Vancouver Avenue, BC is your house. That's your principal residence. Now the CRA knows that you are the person that this other person is paying rental income to. Now, do you understand how that works now? You are not family members. You filed your return as this is my house. This person has filed the return as this is my house. I'm claiming rental expense because typically you can't claim rental expense in your house. But somebody is claiming rental expense using that same address. Now the CRA will investigate. Why are you claiming rental expense in a house that's not supposed to? And they say, oh, I'm a tenant here. I don't even know the person upstairs. I'm just a tenant. Now they come to you. Oh, you live here. This is your house. But you've never reported rental income. So you've subletted your house or one room in your house to someone and you're not paying tax on the amount of money you're collecting as rent. Now you're in trouble. Now the CRA is going to calculate the income tax for all the years that you've collected rent from people and you've never paid. And you have to pay. So that's a very important aspect of tax that people do not know exists. So just look at tax this way. Every income you earn is taxable in Canada. The only income, in quotes, that's not taxable are gifts. I give your money $10,000. That's a gift. Even at that, the CRA can investigate who just gives somebody $10,000 as gift. It feels fishy. I might be trying to reduce my tax. I earn 100,000. I don't want to be, let's say, no, I earn 115,000. And the threshold for entering another bracket is 113,000. So I give Yomade a gift of 3,000 because I'm trying to be smart. I want to drop my threshold. The CRA just investigates what is the relationship. Why are you giving her a gift of 3,000? What? Explain. If I cannot justify that gift that I've paid her, I will be in trouble. She will also have to pay tax on that gift. So every income you earn in Canada is taxable. Every income.
Thank you very much. Esther, you can unmute. Esther, you can unmute and ask your question. If Esther is not there, Olaiwola Sule Balogun, you can go.
Yeah, my name is Olaiwola. Jerry, thank you for the contributions for all the things you've said so far. So I'm not asking a question, just to make an addition. So you mentioned that there is no apps. So I think they've introduced that particular rental credit into Wealthsimple. So people that are using Wealthsimple can actually claim it using Wealthsimple. So that's just what I just needed to point out to what you said. Thank you.
All right, thank you for that.
Okay, thank you. Esther, are you still there?
Yes, I'm still here. Thank you very much, Jerry. So my question is about FHSA and TFSA contributions. So, like you already said that for RRSP, those who made contributions up until February can still claim that. Does that still also apply to TFSA and FHSA?
No, it doesn't. So RRSP is the only registered account that has a weird window. That's the only one that allows you to claim up to February. In addition to that, this is unrelated. Your donation expenses for 2024, you can claim up to February 28 as well. This is just for 2024. And that's because of the Canada Post strike that happened last year. So the CRA has extended the window. Instead of typically, donation expenses are only for January to December. But for 2024, you can claim up to February 28, 2025, just for that. But going back to your question, it's only an RRSP account that you can claim your contributions up to February 28. And I hope people know this, that RRSP has a limit. The limit is calculated as 18% of your prior year's income, or a maximum amount that is always changing every year. So if you earn 80,000, for example, last in 2023, your deduction limit for 2024 will be 18% of 80,000. That's what you can contribute. You must not exceed that. If you exceed that, you will pay tax. Although there is a buffer, there is a 2,000 grace period lifetime. So if you were supposed to contribute 10,000 to your RRSP, but you made a mistake and you contributed $10,050, you are fine. If you contributed 10,000 and if you contributed 12,000, you're actually fine for that period. So there's that extra grace period, grace amount of 2,000 that you can pass. But typically, to be on the safe side, there is a deduction limit. It is always in your CRA My Account. Always log in there regularly. When you have these things, just go there and check, oh, what's my deduction limit? How much more space do I have to especially people that you work in companies where your company matches your contribution. So you have a 10,000 limit, you put 250, your company matches your 250. So you're going to meet your limit faster than someone that is contributing themselves. So, and your company is not responsible for knowing when your limit has exceeded. It is your responsibility to stop contributing as soon as you are about to hit that limit. So always make sure you check your notice of assessment immediately after you file and regularly log into your CRA account to check your portal.
Okay, I have one last question. So for someone who has a TFSA and FHSA account, how do you get your receipt so you can be able to use it to file your taxes? Because I don't know how I'm supposed to get that.
Okay, so first of all, your TFSA has nothing to do with filing taxes. Your TFSA is a tax-free account, meaning you're not even supposed to pay tax on it. The government will not deduct tax from it, so you don't have to report it. You can have $1 million in TFSA. you never have to report it because it is not a taxable account. But for other accounts and generally, your any bank or paying company that you open, financial institution that you open your account with, they will issue a receipt. Your bank is going to give you your TFSA, even if it's World Simple, an online bank. They will give you a receipt at the end of the period that shows you how much you've contributed throughout the year, your FHSA, your RSP. You can also check for these receipts on your CRA My Accounts portal. There's a section there called T4 and other slips. If you click on it, you will see every slip that's, because like I said, each of these companies send your information to the CRA. So the CRA has this information already.
Correct.
So the CRA has this information already and you can access it yourself. So I have filed taxes for people that did not collect T4s from their company, but I was able to download it and pull it into my software from their page because I have access to their page. So, but answering your question again, you can get all of these receipts from your company, all of it, from the financial institutions that you are using. Sorry.
Okay, this guy is good. It's good. It's good. Don't want attention. Yes, now, because I can relate to what he's saying.
Yomade, you are on mute, just in case you don't know.
Oh, sorry, I didn't even know. I was telling Olaiwola to just mute his system. And Dazel, please, you can also mute, Knuckling Dazel. Foluke, please unmute and ask your question.
All right, thank you, Jerry. I've learned a lot today. However, I want to ask questions in two folds. The first fold is I've been doing something. When I came to Canada, I was low income, and I always got CRA always told me I had room to contribute to my TFSA, and I had about 24,000 or something. I've never contributed at all because I felt I was low income. So if I want to, with the room I have for the year, can I just pull in that full amount into it for a particular year? And what will be the implication for me? Then another thing I was thinking of is for low income earners, do they still need to contribute? Because I think they will get the full tax refund for that year. Do they still need to contribute to TFSA or FHSA to get additional tax returns?
You don't get it.
Okay, so you don't get a tax refund for anything that happens to your TFSA. So each of these registered accounts are structured in different ways. The CRA is smart. Any account that gives you a tax that enables you qualify for a tax refund, we will have something that the other one does not have. So a TFSA is not taxable, meaning just look at it this way. TFSA means tax-free. So it has nothing to do with you filing taxes. The only guidance you need is there is a limit to how much you can contribute yearly. It is determined by a number of factors that actually, there's a lot of calculations that go into it. The CPP inflation numbers in the year is what is going to determine what the next year's tax contribution room is going to be. So for last year it was 7,000. For this year it's also 7,000. 2 years ago it was 6,500. 3 years ago it was 6,000. So it can either stay at what it is or increase. What it just means is it accumulates yearly. So if you came into Canada in 2023, and you've never contributed to your TFSA account, your contribution room is going to be 6,500 plus 7,000 plus 7,000. That's 14. That's 20,500. Meaning you can take 20,500 cash today and send it into your TFSA account, and you are good. You don't get a tax refund for this. But whatever you do with that money in that account, even if you multiply that, you are lucky, you buy shares, you buy crypto in that account, and it multiplies by 1,000. That money is yours and it is free of taxes for life because you didn't exceed the limit. Now, for your RRSP and your FHSA, you said you don't have to contribute to any of these accounts. These accounts are just beneficiary accounts. You can take advantage of them. So I tell people, in as much as it is advisable to contribute to reduce, if you don't have money, you are struggling to cope, then don't kill yourself. Survive. At some point in the future, when you are in a better financial position, then you can take advantage of these accounts. The good thing is they always accumulate. An RRSP loan will continue to increase as long as your income continues to increase. So you're going to keep having, I know people with 90,000 limits, like they can take 90,000 and dump into the RRSP today and use that to reduce their taxable income in another year if they have that amount of money. For your FHSA, it is actually a very specific account. It is the meaning of an FHSA is first home savings account, meaning it is for people who have not built a house for the first time. So you can open that account, contribute a maximum of 8,000 yearly for a maximum of 5 years, meaning 40,000 is the cap. When you hit 40,000 contribution into that account, you stop. Any money you contribute higher than that, the CRA will tax you and penalize you, because some people might decide to use this account to avoid the taxes. And at the end of the day, the CRA is very, very strong on that. Tax avoidance is something you don't want to do, especially when it is bordering on evasion. So follow the limits. You can contribute 8,000 yearly for 5 years. If you've contributed 16,000 because you had a prior year contribution loan, then it means you have 32,000 left. As soon as you get to 40,000, you stop. Now you can use whatever you've contributed in a year. You can use it to reduce your taxable income. And of course, depending on your situation, you might get a refund from that. So these accounts are very specific. You don't want to just assume that they work in a blanket format across board. You need to, if you cannot make the research on your own, ask someone that knows what they are doing. It is very important because none of these accounts, I repeat, none of these accounts operate in the same way. So yeah.
Okay, so the last question, that's from Udochukwu. Udochukwu, you can unmute and ask your question.
Okay, yeah. So I already dropped a message on the message this thing. So I was just asking for someone who is new in Canada and wants to go into the tax profession. What's the way forward? I guess this one has to be an offline discussion, if you don't mind.
Yeah, I think for the benefit of the purpose of the group, we can keep this offline.
Yes, so Udochukwu, I dropped a link. From that link, you can reach out to Jerry. You will see it is on the chat. I also dropped the link for the community Thrive because we always have different events. So if you come to the community, you can ask other questions. We can link you to Jerry directly. I also saw people that asked how much does Jerry charge for his tax consultation or him filing tax. We've also dropped that link. Through that link, you can reach out to Jerry. You can also join the Thrive community, and we would link you to Jerry. So we would like to say thank you so much, Jerry, for coming all the way from Calgary, even though it's virtual, to the Thrive community. This is a community, that is very passionate about people thriving in Canada. When I came, I had a lot of roadblocks, and this is what drove my passion to say I want to see other immigrants succeed here, not just live bare minimum, because there are a lot of people that were thriving back home in Nigeria. So why do you want to just live the bare minimum? So anywhere where we can get information, get real people that do not, that are not gatekeepers, that are able to help the community thrive. We do not take this, your coming here, for granted. We really appreciate. Thank you everyone for joining. Pokwala Martins, we might not be able to take your questions. It's a wrap for the day. Just join the Thrive community. I have dropped the link on the chat. You will see the link. Join the WhatsApp. So we will take your questions. We can also connect you to Jerry. Thank you, everyone, for joining. Please, our meetings are always very insightful. Always try to bring someone along. We can all thrive together in Canada. Please, let's have a great day.
Thank you, Yomade. You're doing a great job. Well done. And to everyone that's listened to me, I hope I've been able to, add some impact to your life one way or the other.
Yes, you have.
Thank you for having me. Take care, everyone. Have a good evening.
All right.
Bye. Thank you for coming.
Yeah. Bye, everyone.
Bye.
Bye. Thank you, Yomade.